Hey friends, welcome back to another episode of Making Sense of Your Market. Today is Monday. I'm coming to you a little late. It's Monday, March 14th, 2022. I have an incredible message for you today on how to save money on your mortgage. Now, this message today is not necessarily my personal belief system on how to manage your mortgage, but it's a message to those who find themselves more risk adverse. I'm getting more phone calls today from clients that are out shopping for a home pre-approved, past clients of mine that are homeowners asking about the market and the state of the market and what's going to happen to their home values and what's going to happen to the stock market and all of that. And some of these questions are I'm unable to answer. But as far as your mortgage, as far as protecting your mortgage and your net worth or wealth relative to your home, today's message is going to help save you a lot of money and help you become mortgage debt free a lot sooner. But before I get into that, every single week I create Making Sense of Your Markets for one main reason: to keep you in tune of what's going on in your market. Right now there's a lot of chaos and there's a lot of noise in the world, especially here in the United States relative to the economy. Although the housing market is doing really well, mortgage rates are going up like crazy, home values are going up like crazy, but so is inflation, so is the cost of living, I went to fill up my truck this weekend and it's a diesel and I'm $6 a gallon right now, which is absolutely insane. I've never seen anything like it in my lifetime, bringing about a lot of concern, of course. So today's message, I hope, will bring a little bit of calm and a little bit of clarity to what's going on in your market. I started this series back in November of 2016, right before the presidential election, where the temperature was right about the same. There was a lot of uncertainty, there was a lot of chaos, a lot of noise, and I'm hoping that these messages every single week will bring some clarity to you. So first off, are mortgage interest rates up or down week over week? They are up, just like everything right now. Mortgage rates went from about 3.875 to this week, they're at about 4 to 4.25 for a 30-year fixed rate right now. So up about 1/8 of a percentage point. Still a great time to finance real estate, but week over week, rates are up. The other thing I like to talk about is something money related. I like to either help save you money or help you make more money. This week, I'm going to help you save money on your mortgage. So the tip this week is, if you're risk adverse, meaning you don't really have a lot of money in the stock market, you don't really want to invest in the stock market, it's too risky, but I would take out a 15-year mortgage, or I would like to save more interest on my 30-year fixed rate mortgage. This is a strategy that works, and I've applied it to a lot of people over my career. The idea around this, and I'll put the link to this report down below this video. This is a total cost analysis through some software that I use in my business. And I took an $800,000 purchase. So if you're buying a home today, for example, or you're a homeowner, but let's say you're buying a home today at $800,000, you're putting 20% down. Your total monthly payment with property taxes and homeowners insurance and principal interest is $3,850 a month. If you add $300 a month to that payment that goes directly to principal, you knock off 5 years off the life of your loan. And I don't like talking about terms of 30-year fix right now, or terms of 30 years right now, because it's too far out. But over the next 15 years, you'll save almost $22,000 in interest. So let's say we bump that up to $500 extra a month. Instead of putting that in the stock market or putting it into savings, you would save $36,000 in interest approximately, and you'd knock off almost 9 years off the life of your mortgage. Let's say you bumped it up to $700 extra a month. You'd save almost $50,000 in interest over the next 15 years, and you'd knock off 10 plus years off the life of your mortgage. So this is a great money saving tip. If you're risk adverse and you don't want to invest in crypto and you don't want to invest in the stock market, this right here will save you a lot of money. The last thing I like to talk about every single week is something mindset related, something that can fuel our mind. And I'm going through a 52-week series from the best-selling book, The 7 Habits of Highly Effective People. We are on week 35. You can go to my YouTube channel to check out all the 34 other episodes. But this week, Dr. Stephen R. Covey talks about opening your heart. I love this statement or this quote he says. He goes, when you really listen to another person from their point of view and reflect back to them that understanding, it's like giving them emotional oxygen. This week, I want to encourage you to listen better. It's something I'm working on in my life. If you have any questions about today's principal reduction strategy or mortgage rates or buying a home or coming to our homebuyer class, this month, reach out to me. I'd love to connect. Bye for now.